Good morning, everyone. It's my pleasure to call this meeting of the Sinking Fund Commission to order. We will be recording. The recording will be available to the public online on the Sinking Fund website within 10 days. If you're joining the meeting, you are consenting to the recording, and your login, email, phone number may be part of the recording and made available to the public. I hope everyone understands that. The first item of business on the agenda is the approval of the commission's transcript for the March meeting. Is there a motion to approve?
I'll make a motion to approve.
I'll make a motion.
I'll
A
second
motion
the
has
motion.
been made. Is there a second?
Yes, sir.
I'll second.
A motion has been made and properly seconded. All those in favor say aye.
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 All right. Thank you. At this time, I'd like to turn the meeting over to Christopher for comment.
All right. I'll shoot it over to Alex in a second, but I'm just putting the PFM memo up on the screen. You may recall at a prior meeting, there was discussion regarding having the option, at least a placeholder or the ability upon need to shift fixed income assets into a passive index option. We put up an RFP seeking managers who were interested in that. We got 2 responses, first from Northern Trust, the second from Rumline. Both PFM and myself reviewed the applications and the documents that were submitted. And PFM's prepared a short memo and recommendation, which I concur with. And with that, I'll let Alex walk through it. And of course, we can answer any questions the commissioners have.
Okay, thanks, Chris. And I'm going to turn my camera off just because, as you can see, I'm in my car and have to sort of zoom in on my phone here. But yeah, with only two responses, it's an index fund. I think we leaned heavily on I guess I should say very briefly, fixed income indices are not investable indices like stock indices are. They're providers use a sampling process to replicate the characteristics of the index. So, it was the ability to effectively do that was the main technical focus of the analysis. Both firms were generally equal, and they in their ability to provide that at varying asset levels. Rumline is a majority woman-owned firm. They have done a lot, I think, for this fund, and I think the city elsewhere in the past, in terms of they've shown a commitment to a good level of client service. They've met all the requests for selective security restrictions. And then on top of everything else, again, we're the second main element is fees. Rumline came in at a very competitive 2 basis points. Off the top, I can't recall Northern Trust was. It might have been 7, maybe.
Yes,
Chris.
it was
Yeah,
7.
So, it was a pretty clear and simple choice for us. And as Chris said, we're not. There's no immediate plans to allocate here. I think the portfolio is roughly 2.5–3% overweight to equities as a whole. I don't think we'll be rushing back here to overweight, fixed income at any point. But I think maybe the most likely scenario would be at some point, say we would recommend going back to a neutral allocation. This is a way to quickly do that in a way that you've got the full characteristics, full duration of the Bloomberg Barclays aggregate. So that's it for me on that.
Yeah, we're happy to take questions if there are any, or if the commissioners are inclined to make a motion to accept the recommendation, but whatever your pleasure is.
So, Christopher, are you saying this is not something that we need to move on immediately? This is something that in the future we would have an option to move forward with.
So it would be in terms of getting the account set up, in terms of getting the paperwork done and such, it would be helpful for the commissioners to approve it now or in the very near future. That way, in the event, at a future meeting or at a future time, if we did want to rebalance or if there was a desire to put funds into a passive option, we'd be able to do that. We'd be able to do that immediately. But there's no immediate recommendation to move funds into this new account. It's just to approve it and to have it set up for future use.
Got it. And it's my understanding that the two of you are recommending Rumline.
Yes, for the reasons that Alex stated and outlined in the memo.
Got it. So what's the will of the commissioners? I think we should move forward with an action to approve.
Yeah, I think it's a good idea. I think when we discussed it, it might have been 2 meetings ago or last meeting, I don't recall, but it's every other fixed income we have is active management. And sometimes there's question about where more money should be allocated to which manager. This is just a good holding vehicle, let's call it, for income. So I think it's a great idea. Yeah, I agree, Don. It's a good idea. I would make a motion to approve the recommendation of Chris and Alex.
Is there a
I will
second?
second it.
Thank you very much. A motion has been made and properly seconded. All those in favor, please say aye.
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 Opposed? The ayes have it. There doesn't appear to be any objections. So the motion is passed. Christopher, can I assume that we're going to move forward with the next item on the agenda, which is investment performance?
Yes, thanks, Don. I just put the most recently available report up on the screen. I would just note a couple things. As of this morning, there's just under $646 million in total funds in the retirement reserve. May have also seen before you logged on, the CPI numbers came in line with economists and estimate forecasts. The stock market futures reacted positively to that. And now, from the little bit I've been able to read before the meeting, the market is back to pricing in 2 rate cuts before the end of the year based on that one report. The market's been all over the place as far as we've been at 7 rate cuts. We've been down to 0. Now we're at 2. So we shall see what happens. But with that, I'll turn it over to Alex to talk about recent performance and to make any other market commentary and to answer questions.
Thank you, Chris. Yeah, I don't know if you want to, if whoever has got control can bring up. I think we have the March. April should be available, if not by the end of today, at some point, pretty early tomorrow, I would expect. Again, I think we've covered it. Was obviously a very good start to the year. Then there was maybe some, negative or less than positive inflation news in March and April. Chris mentioned, 7 rate cuts down to 0. Our view entering the year was closer to the 2, or it was more, we don't really try to pinpoint that exact kind of thing. It was more, we expected certainly in the latter half of the year, most likely even the last quarter. The stocks have been very volatile. They were up, I think, 10.5% or so through March. At one point, selling off quite a bit in April, again, amidst, Fed commentary, differing inflation expectations, or news, excuse me. I think at one point they had fallen to be up only, 3% for the year. So far in May, again, things have, gotten generally back on track. Through yesterday, they were up 9, nearly 10% again on a year-to-date basis. International stocks have generally continued to move ahead even through April, up 6.5 year-to-date. And again, interest rates have been volatile. On the open market, jumping up during April before falling back down. I think at one point bonds were down 3% year-to-date. As of yesterday, they're down about 1.8. So again, May has been generally pretty good for all asset classes. I had not, I'm in the car listening to the BBC, and I had not seen the CPI data or heard that this morning. So that's very positive news. I've been reading some other things. Some economists were expecting, a lot of data, comes in on a lag and then gets revised. There were some expecting that, when we get to like January and we look at the 3-month trailing inflation on a revised estimate, some are saying that that could be as low as 1.5, 1.75, 1.8%, below that 2% target. Today's news is certainly good news for that. There was something else I was going to say. Oh, in addition to, I think, you know, varying views on inflation over the last month or maybe the last 2 weeks. Corporate earnings have been very, very strong. Again, they've priced in some different changes in the uh, bond market, but generally across most sectors, earnings have been better than expected. The consumer has generally remained throughout, a year and a half, 2 years, very resilient. The IMF, when doing their forecast for the U.S. this year, made special consideration to specifically call out the U.S. consumer. That being said, we have seen a little bit of a slowdown most recently, month to month in the job market. And when certain companies were giving out their earnings, like in the last week, 2 weeks here, uh, a couple of them, consumer staples or whatnot, noted they were beginning to see some weakness in the value, the low end value consumer. McDonald's, I think, was the big one that stuck in my mind. Because I like McDonald's a lot. My friends and I joke, we're like, what happened to the dollar menu? But it really has jumped up, and now it's to the point where McDonald's has seen that impact in their sales. Again, we've seen corporate earnings and profits have been very strong. So there's the delicate balance between consumer health and earnings, which ultimately belie the stock market. McDonald's, just to continue that anecdote, I think they already responded and they're saying they're working on some different menu pricing and different things. So we'll see how the consumer responds to that over the next 2 or 3 months or whatever. But generally, our outlook over the intermediate term is good. It's still an election year. As Chris said, the markets have been extremely volatile over the last month and a half. Um, Today's news, seems, obviously, looks good. I expect we'll see, the markets go up. I also wouldn't be surprised if there was another pullback. I don't know if it'll hit correction territory this year at 10% pullback, but it would be reasonable to see a bumpy ride. I don't think we're in for a recession. I think those fears are kind of put to bed, but we will continue to watch the labor market as well as the consumer health. Questions on any of that? If not, like I said, the March performance report I cannot see. I have it in my email, but I don't know if I'll be able to share it. But I can at least read some highlights.
Is it not visible on the screen? I pulled it
I
up.
just see the agenda.
All right, hang on a second. I apologize. Let me pull it up or try to. Is it available now?
No.
It's really weird. Don't know why that would be. I apologize. I don't know why it would have let me share the other.
Sometimes you have to select a different window when you go to share.
Yeah, that's what I'm trying to do. So let me see if that.
There it is.
Yeah.
Okay, sorry about that.
No problem. So, yep, as of March 31st. So, 638,418,973 dollars. 1 month net of fee 253. A few bips up over the benchmark. Pretty good return. Nearly a full percentage point on a fiscal year. Calendar year. Two decent quarters. And then obviously pretty strong trailing returns more recently. Not a whole lot to say within domestic equity. PineBridge has continued, to perform as advertised. We've been pretty pleased with that most recently. I think they're a little behind over the last 12 months, but no concern. Same thing within small cap. Copeland has done well in a volatile rate environment, which can sometimes impact dividend stocks. The small cap index, the S&P 600, has actually lagged the Russell 2000 last 2 quarters. When the market has been up the small cap market is up a little bit less than large caps, but over the last 3 years, certainly since inception. The decision to include the S&P 600 as an index over the Russell 2000 has been a good one. So no concerns there, no recommendations. We're very pleased with that. On the international front, for the month, a mixed bag of performance, but year to date, pretty good from both actives, Acadian and Ernest, navigating a pretty tough climate. So again, the actives within domestic equity, all contributing, to generate that, 1 year, outperformance. Next page, fixed income, again, and this maybe also speaks a little bit to the decision to have a low cost passive manager on hand ready to go. A little closer to the benchmark here. The actives a little more at times defensively minded. As a whole, the combined fixed income right on top of the Barclays aggregate. Barksdale, an example of maybe a defensive man position. Sorry, Floyd is just texting me here. We'll see if he gets on or not. But and then again, continued contribution from corporate credit as well as high yield. Sky Harbor on a year-to-date basis is done pretty well to continue to kind of reverse some of their modest underperformance from the last year or so, but they've done pretty well. So it's interesting. The cash isn't being shown, but on that 2.5% or so, you're probably earning about 5% annually right now. So that's also pretty positive. But and no recommended changes. We continue to draw from equities throughout this. Again, we draw from classes that we see as fair or overvalued. I think valuations are basically at or slightly above 5-year trailing averages across the board. As prices have gone up, earnings have gone up too. So we're not really going to try to time peak interest rates here. Obviously I'll talk with the team when I get back today and digest any possible changes related to CPI or other inflation data or anything else. We'll be in touch with Chris. If we need to. I doubt we'll need to convene and do anything in the interim. But again, now that we have that approved, we'll work forward with Rumbline, and we've got a vehicle to neutral or overweight fixed income if we need to. So yeah, without dragging it out too much, that's the end of my comments. I'll leave it up for any final questions.
Alex, in terms of your expectations for April, you would expect April's total performance, total fund to be better than March?
No. April, I expect when April comes out, it'll, what was this? If you go back one page, this was like what, 636 million or something. What is it, 638 million? Chris, you said it was 640 something this morning?
Just
Can't
under
remember.
just under 646 million.
So under 646 million, it's going up. I mean, there's been a recovery in the markets, but you paid out 2 months of benefits. A lot of that recovery has been in May done. So I expect you'll see a decline in April, before jumping up again we'll see where May ends up. I'm just trying to think. Chris, you're not making like regular contributions into the plan throughout the year or anything, right?
No.
I'm just curious. Oh, maybe, you know what? I think maybe that market value might include, there's some separate custody cash, or there's a separate stub amount, I think, that might also be reflected in that. I'm just surprised that it's actually that much higher, frankly, but you know.
Yeah, Don, if just going back, I mean, at the end of April, just to look at the indexes, and this is not a planned performance, but just index performance. So for the month of April, the Barclays aggregate was down about 2.5%. The S&P 500 equity index was down over 4%. The Dow Jones index was down almost 5%. International equities were also down. So April was a tough month across equity and fixed income. I would expect, negative numbers in April, but through May, there's been a decent recovery, and I would expect that as of yesterday, a significant portion of what happened in April has been recovered month to date.
Thank you, Chris.
Yep.
Appreciate it. Are there any other questions?
Yep.
Go ahead. I'm sorry.
No, I was going to ask the same thing. I didn't mean to interrupt. I'm sorry, Don.
Okay. Are there any other questions at this point?
Nope.
Is there any new business that we need to cover that we have not already covered?
I just wanted to mention super briefly, Don, the RFPs continue. I expect no later than the July meeting to have recommendation and possible presentation or presentations on the consultant search. Custody Bank RFP is open and moving forward. The auditor RFP, we were able to extend that contract for one additional year with Witham, so we will reissue the audit RFP at the end of the year. But the custody bank is open, and we will have recommendations on the consultant search no later than the July meeting. That was all I had.
Thank you for that update. Commissioners, is there a motion to adjourn?
I'll make a motion.
So moved. Have a great day.
Thanks
Thanks,
everyone. Take care.
everybody.
Thank
Thanks,
you.
everyone.
Thanks.
Bye-bye.